Hi everyone, I'm attorney Aiden Durham with 180 Law Co. in Colorado. Welcome back to All Up in Your Business, where today we're going to talk about some commonly overlooked but very important tax deductions that you're going to want to make sure you take full advantage of. Before we get into all that fun stuff, please make sure you subscribe if you haven't already done so. Click that little bell so you get notified anytime I post a new video, and you can check the description for some links to additional information and resources. And while I am a lawyer, I'm not your lawyer. The stuff I talk about in this video and all of my videos isn't a substitute for actual legal advice. If you need help with any legal matter or tax matter, you should consult with an attorney who's licensed in your state. So like many of us, you might be in the process of doing your taxes right now, or maybe getting all of your paperwork and stuff together to hopefully have somebody else do your taxes for you. And as a business owner, you're going to want to make sure you take full advantage of all of the tax deductions and credits that are available to you so you can minimize your tax payment and how much you owe as much as possible. Before I get into the different tax deductions that you're going to want to make sure you're aware of, let's quickly talk about how deductions and credits affect your taxes. Most of you, I believe, are operating either as a sole proprietor, maybe an LLC, or perhaps an LLC taxed as an S corporation. If you're operating as an LLC or an LLC taxed as an S corp, that means your business and the way you file taxes is as a pass-through entity. And that means the taxes basically pass through onto your personal tax returns. Only C corporations pay their own corporate tax, but these pass-through entities, there is no corporate tax because it all passes through to the individual business owner or owners. And so, of course, with your business, you have to pay taxes on the profit, but not on the total profit necessarily. You're only going to be paying taxes on the total after you've subtracted certain deductions from your profit. And so, of course, the more deductions you can take, the lower your tax payment is going to be. That's why it's super important that you track your expenses and claim properly any deductions that you can. Now, tax deductions aren't the same as tax credits. Tax deductions, simply put, they lower your profit or your taxable income. So it lowers the amount of income that you have to pay taxes on. Whereas credits affect the actual tax payment that you make. It's a dollar for dollar credit against the taxes that you might owe. So as a very simple example, let's say my business has a profit of $100,000 and I have tax deductions of $10,000. That's going to reduce the amount that I have to pay taxes on from $100,000 to $90,000 versus a credit. Again, let's say I have $100,000 in income and my taxes, I don't know, are going to be $25,000, but I have $10,000 worth of credits. Therefore, my tax payment is going to go from $25,000 down to $15,000. I'm completely making these numbers up. They're not in any way based on like actual tax rates or anything. It's just a way to explain and demonstrate how credits versus deductions work. Okay. All right. Now let's get into some of these deductions that you're going to want to make sure you're aware of so you can limit and reduce the amount of taxes that you have to pay. First, we've got startup costs. These are costs that you put in to start your business. Generally speaking, they're like any other costs that you might take as a business deduction, except they occur before your business has actually started. And this is going to include a lot of the money that you've spent in preparing and launching your business. This could be things like professional service fees. So if you paid an attorney to help you start your business, or to maybe do a trademark research or a trademark application, those are going to be deductible startup costs. Advertising and marketing costs as well, and maybe like travel costs if you had to take a trip to meet with like suppliers or distributors or potential customers. Now, you can't really take all of your startup costs as a deduction in every situation. There are limits and rules to how much of a deduction you can take and things like that. So of course, with all of this, really, you want to consult with a tax professional or just have a tax pro handle it for you so you're taking as much as you actually can. Next, we've got the good old home office deductions. If you're operating your business out of your home, you can take a portion of your home expenses as a business deduction. This is usually usually the proportion of your home that is used and dedicated for business. So if 10% of your home is your home office, then you can take 10% of your home expenses as a deduction. These are usually going to be things like utilities, your rent or mortgage interests, and then often costs for maintenance or repairs to your home as well. There are two ways to go about this. Again, you can take the percentage of those expenses as a deduction. So if my total home expenses are, again, let's say $5,000 and my home office is 10%, then I can take 10% of that $5,000 as a deduction. But the IRS also has a standard home office deduction if you don't want to have to like do all of the math. And currently that standard deduction is $5 per square foot up to 300 square feet. So $5 per square foot of your home office up to 300. You also want to make sure you're taking full advantage of the mileage deduction if you do a lot of driving for your business. If you're going to be deducting your mileage, it's important that you are keeping good track and records of the miles that you drive for business. So like in the beginning of the year, make a note either on your phone maybe or an actual like pad paper that you keep in the car, or use like a mileage tracking app or software. Make a note of your starting mileage in the beginning of the year and then track and make note of how many miles you drive to and from each, meeting or all the business things that you're driving to. And then at the end of the year, make note of what your ending mileage is too. The easiest way though is really to use like an app like Mile IQ. That's the one. I don't really drive for business anymore because I'm completely virtual and I work from home. I haven't taken a mileage deduction in about 3 years. But when I used to, I used Mile IQ and it made it so much easier. The current mileage deduction rate for 2022 is 58.5 cents per mile. And again, just like with the home office deductions, you can take the actual deductions of your mileage, or you can take a kind of standard deduction of your actual expenses for your vehicle. The mileage deduction, like the 58.5 cents per mile, is usually the easiest way to do it though. As a small business owner, some of your medical expenses can be tax deductions as well. Things like health insurance premiums for yourself and your family, medical expenses if they exceed 7.5% of your taxable income, and sometimes even things like exercise equipment or gym memberships, but that's not always the case. So again, check with the tax pro before you go taking those deductions. Education expense deductions are a big one as well. If you spend money on anything that maintains or improves the skills that you need to do your job and to operate this business, those expenses are usually going to be a good tax deduction. This can be things like continuing education courses, maybe online trainings or online courses. Again, really anything that helps you maintain or improve the skills you need for your job. I've been talking about business insurance a lot lately, and in that spirit, business insurance costs are another great tax deduction. So things like general liability insurance, cyber coverage, malpractice or errors and omissions coverage, any insurance that you use and need for your business, those are going to be deductible business expenses as well. Meals and entertainment can also be deductible business expenses too. Not always, but only in some specific instances. Like if you are going out with a client or a potential client to lunch, trying to woo them, trying to get their business, you can take a deduction for those meal expenses. Now, big thing with this, you can only take a deduction for 50% of those expenses. So not the entire amount, 50% is what we're able to do. If you have employees, their salaries or their pay is a deductible expense too. This usually includes bonuses, and it can also include gifts to your employees up to $25 per year. And then finally, one of my favorites, because I think we all have these expenses and should really be taking full advantage of these deductions, office supplies and software. So, pens, paper, printer, ink, laptops, computers, printers, you know, depending on the actual thing. Sometimes you don't get to take a full deduction for it in the current year, but generally speaking, these supplies and software as well. So maybe, you know, Zoom is still a big thing, Microsoft Office expenses, if you're paying for Word, any kind of software or program that you're using for your business, those are going to be deductible expenses as well. So of course, the last thing really we want to do is get in trouble with the IRS. If we, you know, maybe don't take a deduction properly, or if we don't properly document that deduction and the IRS comes a knocking and does an audit and says, hey, you shouldn't have done this, or you did this wrong, that can really be a bad thing. So of course, it is best to work with a tax professional, a CPA, a tax accountant when you're doing and preparing your taxes to make sure you're doing everything properly. And in case it wasn't obvious, this was not an exhaustive list of all the deductions and credits that are available to you as a business owner. Just a few of the more common and important ones that most of us are going to be able to take. If you learned a thing or two, please, I would love it if you give me a thumbs up. Make sure you subscribe if you haven't already. Click the little bell so you get notified when I post a new video. If you're maybe wondering to yourself, okay, now I know what deductions I take, but like, how do I actually take these deductions? What kinds of forms do I have to use to do this? You're in luck, my friend, because I just posted a video about the tax forms that you'll likely need to use as a single member LLC or a pass-through entity. You can check it out right here. I'll meet you over there. Thank you so much for watching. I'm Aiden Durham, and I'll see you next time.